In this video, I go over several trades I took on KPLT ranging from 5 to 15% in gains. I will show you how to observe supply and demand intraday and how to use the information to take profitable trades. I hope you guys enjoyed the video, and if you do, be sure to subscribe and let me know what you learned in the comments. So the first thing we're going to take a look at is what exactly did I say on Friday and why did I think that? So at 10:40 on Friday, I said that KPLT has a large supply zone and that if it breaks, that we're going to see a very small squeeze. And Thanos kind of had a similar agree. And then like that is when it actually happened. So let's figure out exactly what supply zone I was talking about and why Thanos and I thought this was going to happen. And to begin, we're going to move to 1040 roughly. So it looks like around this line is when I said that. So right around here, oops, let me get back to that. Okay. So right around here is where I made the call that KPLT was about to have a breakout. And why did I think that? So let's see what information we have available right now. We know that these two candles right here are the highest volume candles of the day. So what happened when this volume came in? So we had a push over our previous highs, and the highest volume candle has the rejection, and the next candle immediately flushes down, albeit on a lot lower volume, and it continues to fade. So far, we could still expect KPLT to move to higher prices. This rejection right here doesn't indicate to us that this is the high of the day and that it's going to become a fader yet. And the reason why is because the rejection was really low volume and it held at this consolidation period after the previous high, right? Because we got this previous high, which at that time was the highest volume, right? If we only look from where my cursor is to the left, this previous breakout was the highest volume of the day. The rejection was a very, very big volume candle, but it did hold this it held the consolidation and moved higher. And when we got this next rejection, it held that same consolidation. So far, what I'm trying to say is that we don't think that this is necessarily the high of the day yet, because that's what you want to know, whether you're trading on the long or the short side, is where is the high of the day, so that if you're a long buyer, you're not going to keep buying long at the top and be bag holding. And from a short perspective, you want to find the top of the day so that you can put on a short position and fade it for that 5 to 20% gain on that trade. So it holds this consolidation right here. So far we're still feeling pretty good, and we have this wick right here was the highest volume. So what I'm looking at is this wick because it's the highest volume of the day. And I'm calling this a supply zone, that there's going to be a lot of supply in this area. And we come up to start testing it, and we quite easily break through it, but it rejects again on very, very high volume, right? If you look at the highest volume candle, it's this one right here, which means that the highest volume candle of the day, all of the volume was traded at these prices right above. And what was happening in terms of price is that it was being crushed back down. So immediately after, it crushes, like the very next candle after that high volume candle, it crushes all the way back through to the bottom of that zone. Next candle, it bounces up to the top of the zone, rejects. Next candle, bounces up to the top of the zone, rejects. Next 3 candles, bounces up to the top of the zone, rejects. Bounces towards the middle of the zone, a 50% retracement, rejects. And we get our push down to another consolidation area down here and supported by VWAP. What happens? It pushes back to the middle period of the zone and it rejects. And finally, we get a very large, more substantial pullback than anything we had seen before. And when I'm saying substantial, I'm just talking about in terms of percentages of the move. This was an 8% rejection, which we hadn't seen at any other point throughout the day, and it actually got below VWAP. A lot of people, when they see a stock that is a strong stock for the day, when they see it get below VWAP, they think to themselves, okay, this stock is dead. the stock's out of play, that this is the backside. And I don't agree with that assessment, but it's important to understand how other people think. And a lot of people, primarily because this is what Ross Cameron teaches, is that when a stock is below VWAP, the stock is dead. So when we're looking only from this line to the left, the story that has been painted is that we have this very high volume rejection, and then we get a push above it, but again, it rejects. So this is what I would consider a false breakout. And then the next, it looks like maybe 15 minutes or so is just pushing back into that supply zone and rejecting time and time and time again until we get that big 8% flush. So in terms of supply and demand, what we understand is that there is a lot of volume up above 660, and now they're all underwater, and it's below VWAP. So it's unlikely that these people are going to have their shares salvaged by price coming back up to it, because there's not going to be demand down here to bring price back up, is what we would think, right? That's generally what we would think. And if people are bag holding a stock, then it is likely that it would fade. So a lot of people would look at this and think to themselves, okay, this could potentially be the high of the day. And that's important. It's very important to note, a lot of people are thinking that this could potentially be the high of the day because there's a lot of people trapped, because the supply zone was respected so strongly, and because it's below VWAP. So a lot of people are thinking that's the high of the day. That's important. Now, another thing we can notice is that an imbalance was created here. And we've spoken about imbalances on this Discord before. If you're unfamiliar with the imbalances, I'm not going to be giving a super in-depth analysis of like an imbalance, but essentially what it is when price moves too quickly in either direction, market makers' positions are at an imbalance. A market maker likes to make money by having an equal amount of positions long and short, and then making money on the spread. And when price moves too quickly in either direction, because it's their job to provide liquidity, they're going to be the one on the other side of the trade, which means that they're at a loss, right? Because if they're 70% short and 30% long, even if they're making money on the spread on this move down, they're losing money. And I guess this is just an understanding that maybe institutions just aren't allowed to lose, or that they'll fight really hard to make sure that they can make their money. So the imbalance would be right here at this level approximately. And you can see very promptly it comes and fills the imbalance. And even from my perspective, right, I might be thinking right here, okay, this right here could be the true top of the day and a potential short, right? Like for me, if I don't know, if I like without seeing anything else, I would have been looking to short off of around this level. I would look at the volume profile and figure out a more precise level, but somewhere between this price level at 655 to 660, maybe all the way up to 670, not 670, 665 to 655 would be a short level for me. So I'd be thinking like, okay, let's short right here because we have all these people that are trapped. We filled the imbalance. We have no reason to be up here anymore, right? We don't have any reasons to be up here. We filled the imbalances. We have longs trapped. Let's crash prices back down. And what did we do in this bounce? We have more longs that could be ripped down right here, right? Because there's going to be people that are taking this opportunity to buy this dip. So if we can crash prices down and fill some of the lower imbalances, this is just more liquidity that can be trapped on the way down. So I would have been looking to take a short right here, maybe, right? But what happens? I get stopped out, right? I would have got stopped out. I would have lost on this short position, which is fine because I'm risking very little, right? The upside potential for me is shorting this trade is potentially, a 10% gain roughly. And for the risk, we're risking maybe 1 or 2%. But what's important, right? When we have a concrete trade idea that is based on, like, I guess, good reasoning, if the trade goes the other way, then that means something's up, right? Like, we have a very well thought out, well understood supply and demand reason for why this trade should work. If it doesn't, we need to reevaluate everything, and most likely it's going to reverse, right? Like, if I believe really strongly in something and then the stock is doing the opposite, that's a sign of a lot of strength. Like, if I think something's going down but it continues to go up, I know that this stock is very strong. And you'll notice that at the same point that I would have covered, which is on this candle, is when I typed in the Discord that there is a big supply zone and that if we can get above it, it will squeeze. So that, like, the whole thing I'm hoping I'm conveying this properly, that the reasons why this breakout was easy to anticipate is because there is a huge supply zone that was broke out above, rejected from, like a false breakout, and then traded in multiple times before we got a massive flush, trapping a lot of traders. After we fill the imbalance, it only makes sense that the stock continues to move down and make lower lows, right? We would be expecting price to move below this previous low around 610. And when that doesn't happen, that means this is very strong and has a realistic chance at breaking above the supply zone. And if it does break above the supply zone, we can see a squeeze, right? Because people like me would have been shorting right here. And then there's also people that are short up here. So there is a lot of shorts that are trapped that can get squeezed, right? Like I wouldn't have been squeezed because I would have covered right here. But you know, there are a lot of people that would have shorted right here with a risk at high of day, because I hold a lot tighter risk than a lot of other traders. For me, my risk would be, you know, like around the supply zone. A lot of traders would risk high of day, so we can realistically see a squeeze above the previous high of day right here. So anyways, we're going to continue now and see what happens. This candle right here was insane, right? It's way higher volume than this whole period right here, and it goes right to the top of the zone. And that is actually where I bought. I took this trade with an entry at 681. So it looks like I actually top ticked this candle, maybe. Was it? This candle hit a high of 680. So no, I must have bought on the next candle. So the very next candle I bought at 681, and unfortunately I sold at 689. That was a mistake of me. I should have held this longer, but I'm a scalper brain. I always have like insane entries and will sell very quickly just because I'm a scalper. It's how I work. Now notice that this candle is once again the new highest volume of the day, and the stock is pretty strong. I think, you know, now that I look at this, maybe the reason why I sold is because every single time we made a new high on the day, it was the newest highest volume, and it had like the top tail. So maybe I thought that a flush was about to happen, and maybe that's why I sold. So maybe it wasn't just because of my scalper brain. Maybe I saw this and I just don't remember. But we'll look at the next candle, and we rock it, right? We rock it above the previous high of the day, which is where a lot of shorts would want to cover. And again, another highest volume candle of the day. And the reason why that is because shorts are being squeezed. At this point, there are shorts being squeezed because everybody was caught off guard. I mean, look at these three candles. We've moved 10% in the last three candles. And this right here is the intraday short squeeze. People often talk about GME or AMC or BTBT or any of the other meme stocks that have played out, Kodak, whatever. Short squeezes did happen on those, but short squeezes also happen on a smaller scale every single day on many of these leading gappers. And if you're able to pay attention to these supply zones where there are longs trapped, and then you expect there to be a short off of a bounce, but for whatever reason that bounce doesn't start to fade, then you know that there's a high likelihood that there is going to be a squeeze occurring. And let me just repeat that one more time so that you understand the characteristics of this trade so that you can apply it in your trading on other stocks. The first characteristic is that there were longs trapped and we got a big flush so that those longs were trapped underwater. That flush that left imbalances was filled, and then the last characteristic is that after it fills that imbalance, it doesn't flush down, right? Because what should happen after that imbalance is filled is that it flushes down, and that is what will happen in most instances. But when that doesn't happen, that is a very, very strong buying signal. Okay, now we'll continue. So here we start to get our pullback, and I drew this line here because you can see I played this pullback right here as well. Oh, and you can see my 681 buy, right? So right here was, you can see my 2 executions. I bought 681 on this candle and sold 688, which was like a very small scalp. And then after this pullback, or on this pullback, where I drew this line, I bought at 695. Maybe it was this candle right here. 695. Yeah, it was this candle right here. I bought at 695 and then sold at 701. So I didn't quite bottom ticket, but I nearly top ticketed it. And I want to take this moment to take a quick break from the KPLT and instead talk about the when you can trade the micro pullbacks, which was asked by Eric Rice. All right, back to KPLT. Let me check how long we've been recording. Okay, we're at 22 minutes, so I'm going to try to speed things up a little bit so it doesn't go on too long. So we looked at the breakout, and then we looked at the micro pullback. Oh, the next thing is that I said 672 next. I would love that price. So, wow, actually this works out perfectly. Whenever I was planning this, I didn't even realize this. Okay. So, what I played, when I played this micro pullback at 695 to 701, that was like the first example of the micro pullback I showed on the paint, which was that you're buying around a 50% retracement, right? And let's actually take a look just for fun, right? Let's take a look. I actually haven't done this exercise, so I don't know. All right, the previous high was here. So, okay, so I guess in this instance, it's not a 50% retracement. What would have happened though? So you get this breakout right here. This is 27. Okay. So like we'll go down 13 cents from the high. All right. We gotta. So we got on 13 cents from the high. So if you did, we don't know exactly how this played out, but you know, around the 50% retracement, it does kind of hit around the bottom tick of this first pullback, and it does. So like, you know, the candle opens up right here, it pulls back down a little bit. If you did buy at that 50% retracement or around the area, you could get more precise using level 2. You know, that trade would have been a winner on that micro pullback. It's definitely a more risky trade though. Like I said in the paint thing I drew, buying at the 50% is more risky. And again, I don't recommend buying at the 50%, but that's just the most simple across the board way to express it, right? Because it would be really bad to just go into like a full out lecture on micro pullbacks when we're mainly interested in talking about KPLT. So the other part of the micro pullback is you go and look at high demand zones, right? Like where has there been where will demand step in, right? And that's a lot safer. So that 672 level that I talked about in the Discord, that price was actually me doing the second version of the micro pullback, right? Like this version right here was the first version of the sorry guys, stuttering. The 695 entry was the first version of the micro pullback. And then my 672 entry is the second version of my micro pullback. Now, let's figure out why did I do 672. It's actually mind-blowingly simple, and let me show you. I looked at this previous supply zone that we looked at earlier, and let me actually just extend this throughout the day because I used this for the entire day. This zone right here, after it broke above it and gave us a good breakout, that squeeze, this zone becomes the pivotal point for the entire session. At that point, your entire trading strategy, or rather, I won't project, my entire trading strategy was based off of this zone right here for the entire rest of this trading session. And this was formed at 9:35. So the first hour of trading, it formed something that I used the entire day to make a array of really good calls. So look how simple this is, guys. 672 was halfway through the supply zone. That became like a demand zone, right? Because after you get above it, people are gonna we're gonna be defending this price. Whether it's shorts trying to cover at break even, that would be demand here, or people like me who notice that this is where shorts are trapped, trying to make sure that shorts stay trapped. So that like this just becomes the whole idea of resistance becomes support or support becomes resistance. It's the same with zones. I don't really use like on the dot support and resistance. I do prefer zones. And this 72 level was just a halfback. And the reason why I didn't have the resources with me because I was in class and I was trading. So we'll continue. So we start to get our pullback and it meets the top of our range and bounces, right? And at that point in the Discord, I threw out another level that was more specific. And the more specific level was the 666 and the 672. And I said I'll take a half position at both. So let's look at how these levels play. So we get our pullback, our what I would call a micro pullback, down to the demand zone, and we start to get a bounce. And look what happens at $7. Now I actually commented on this in the Discord, but I'm not gonna pull that up because I don't have the live recording for this session, unfortunately. So I can't reference that in the video. But instead, I'll just kind of describe what happened. I called in the Discord. Actually, maybe I will pull it up. You guys can skip forward in the video. I'm not gonna edit this. All right, here we go. Here is the Discord, and let's see. Looks low volume. I think it's gonna flush. A lot of selling at 7. There it is. So that's all it was. I saw what I was seeing at this point, right before this flush happened. I was looking at this right here, and I was talking about how low volume this move up. Look at the, so we have 3 green candles. The first green candle, very low volume. Second green candle, very low volume. Like whenever these happen, you'd like to see the volume matching like the low, like the consolidation period. And then whenever we get the next breakout leg up, you want it to be like matching these, like the largest volume candles. So it was just, it felt like there wasn't a lot of volume. I was watching the level 2 and time and sales. It looked pretty pathetic. And finally, this candle right here, it was touching 7. It was on decently high volume, but when you watched the time and sales, it was just getting crushed. And that's when I was just saying that there's a lot of selling at 7 and that I thought it was going to flush. And finally, what happens? It breaks above 7, right? And gets like getting the breakout buyers to buy in, right? Like, oh shit, it's breaking out. Let me buy it. And then what does it do? It crushes them, right? What's happening right here is that long buyers are being trapped before taking prices lower. That's what's happening, right? In order to take prices lower, the easiest way to do it is to trap longs and then make them go underwater so that they sell for you, okay? But we still have our levels at 672 and 666. The 672 level is literally just half of this range, or half of the supply demand zone. And then 666 was because there's this imbalance. Notice that we have this imbalance. And remember how I was looking to short at this area because it was filling this imbalance? Well, now I'm looking to long at this area because it's filling this imbalance, and now it's strong, right? So when this was a supply zone and it was filling an imbalance, I was looking to short. And now that this is a demand zone and there's an imbalance, I'm looking to long. So we'll continue. And there we go. 672. And we're rocketing, right? And we're out of there. That's a home run. That right there is a home run, right? So we get 672 all the way up to here. You know, that's a 15% move. Not that I would have ever captured all of this anyways, but maybe some of you guys are crazy enough to hold it all because I'm just a scalper. I like taking my profits. You know, if I bought in here, which I didn't get filled, I would have already been out probably at like 690, taking a 2% gain or something pathetic. But at this point, I guess, is there anything important that we want to talk about? Yeah, I mean, I guess so. So we're seeing like every single high is making like more volume high, which is good. You like to see that. It's called float rotation. I don't really use it a lot in my trading, but Nate from Investor Underground talks about float rotation a lot and just how it kind of allows the stock to snowball out of control. The reason why, from my understanding, the reason why he thinks it's so important is because it shows that the shares are being transferred through a lot of hands and that no individual really controls the float. Because if one individual controls the float, then they can tank it at any point they want. Um, but finally, this right here is kind of the starting signs that we might start want to be we might start wanting to be interested in taking a short position. I wouldn't be shorting yet, but at this point I'm no longer longing. And the reason why is because um this whole move was predicated on this squeeze right here, and finally we've gotten our large move. Like at this point, anyone who shorted right here has probably covered if they're going to cover, um, and it's just I don't see there's not a strong argument for um buying anywhere above here. Anywhere above here, there's no strong argument. There's not a lot of volume above it in terms of like at certain prices, right? Like sorry, let me restructure. So when there's consolidation like this right here, there's a lot of people in these price ranges, right? But whenever something's just moving steadily up like this, there is a lot of volume in this area, but it's like very well distributed throughout. You know what I mean? Like here, it's all condensed in a couple prices, and they're going to want to defend those prices. But here, it's very well spread out and thin, right? So even though there's a lot of volume, it's thin. And now they're starting to become underwater, right? At this point, after this first red candle right here, anybody who bought right here, which there's a lot of volume as you can see in this area, is now underwater, right? So we're scared. That's why I was saying that at this point you don't want to be longing, because a lot of people are trapped. And when people are trapped, it's susceptible to big flushes, right? You don't want to be buying a stock or holding a stock, especially when there's a lot of long buyers trapped. So what happens? The next candles, it flushes really, really hard. And coincidentally, I mean, you saw that I didn't know this. The level that I drew, you wouldn't want to buy above. It turns out that that's actually the bottom tick pretty much for the bounce. And the reason why I drew the level at 7 is because you're going to see that it's not quite as tight as this right here, but there is a lot of trading going on at this price, right? Like if we just look at the number of candles trading there, and there's a lot of volume. Like look at these. These are still some of the highest volume candles of the day, and they traded in this range. So this was just me eyeballing it too. Like you don't have to have a volume profile open to see this. I was able to just look at the chart and know that this was a high volume area, and that there would be buyers wanting to defend it. And as you can see, it bounced from this price and gave a pretty big bounce. So even just eyeballing, guys, like it's not really rocket science. It's actually quite simple. Just look using like our eyeball method. No technical stuff. We got our 5.5% bounce. And what's the crazy thing, right? You buy this bounce right here. Right? And you say, okay, Eric, well, there was a lot of consolidation right there. There's a lot of volume at that price. But where do I hold my long position, right? If you're not me and you're actually able to hold a trade longer than 3 minutes because you don't have a scalper brain, the answer is quite simple, right? We got this massive flush, and what happens when that massive flush is created? It creates an imbalance, right? And where did that imbalance get filled? Right there. What was the top tick of this bounce? The top of that imbalance. It's really simple, isn't it? You know? And the crazy thing is, to add to this, there's also these lows right here that now, right, whenever you get below it, that will become support, becomes resistance, right? So now there's going to be sellers wanting to sell off of that, right? So this would be the first possible short entry, right? Because it's this trade right here, this short, is the exact same logic for the short right here, right? Remember what I said right here? There is a supply zone there was an imbalance. It filled the imbalance. So now we're looking to short. Same thing. There is a supply zone. There is a supply zone. There is an imbalance. And coincidentally, that imbalance is halfway through that supply zone. So you short off that. It's a perfect entry. And look at that. It literally fades all the way down to VWAP. And that VWAP's a very easy target as a short seller. So you short off of this, which again is such an easy short. And you're making 7% on your trade. It's actually that simple. And at no point in this trade do you have to hold a trade while it's red. You know what I mean? Like, you top tick this trade, so you never have to have the discomfort of seeing your P&L be down like a lot. Very simple, and we're going through this together. So, and I this wasn't something I had planned to talk about either. It's just something that I noticed. So now we're getting our bounce off VWAP, but what is this bounce showing? Very low volume, right? This bounce off VWAP is very low volume. Let's look at the next candle. Low volume, and our first red candle. So we have extremely low volume on this bounce, right? What do I see here? Do I see that this is a bounce off VWAP that's going to push back up to maybe this like high volume area up here at 733? I honestly don't think so. There's too low volume for that for a bounce off VWAP. Instead, I think that this is a trap. I think that this is a trap that's being orchestrated by one of the larger people that are interested in shorting. And let's talk about what this looks like and why that might be true. So we talk about supply and demand because that's really all that matters, right? And let's say that we're going to look at two areas. We're going to look at first this area right here. Specifically, we're going to have a... Okay, that's fun. Specifically with an interest on this area right here. And then the next thing we're going to look at is this right here. Okay. So the first one we're talking about is number 1, right? So we're going to annotate that with number 1. Right here, there's going to be a lot of supply. And right here, there's going to be a lot of supply and not a lot of demand, so we get our prices to go down, right? Now, why does the stock bounce right here? Why does the stock bounce right here? That's the question. So one explanation is that a lot of retailers could increase their demand to be way more than the supply, right? But is that the case? I kind of don't think so, because the volume is so low. I think if the retailers were the reasons why this was bouncing, the volume would be a lot higher. I think what might be happening, whoever it is that's here, right, whether it's the intelligent trader or like a retailer, not a retailer, or institution, they're just stopping their selling. You know what I mean? Like, if they stop selling, the supply on the stock decreases, and then there's more demand, and you get a bounce. And that's why the bounce is so small. It's like more the demand isn't changing too much. It's more the supply. And you know, because it is VWAP, the demand will increase, but marginally. Because there will be, like, without a doubt, there is no, like, speculation here. There were retailers that saw VWAP and decided to buy off of it. Without a doubt, 100%. And if the people who were offering supply on the stock decided to reduce it, then the stock will bounce, giving the people who bought at VWAP the illusion that this could potentially bounce higher. Now the question is, like, Eric, why would they do that? To what advantage is it for the people to stop selling at that price? Well, there is a couple reasons. One, on the bounce, it gives them the ability to sell more at a higher price. Two, it traps long buyers so that when you move the price below their entries, it adds more selling to it, right? Because if you sell up here and then just hold your shares and don't do anything, someone else has to sell to move the price down for you to profit from your shorts. So the best way to do that is to give these bounces where there's going to be long buyers that get trapped, right? You want, for your backside of the move, whoever's orchestrating this move, their objective is to get people to buy on the backside so that when they finally rip it from under their feet, there's going to be enough natural selling occurring that their shorts are going to be profiting, right? Because if every time they add into the position, their average is going to go lower, 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 lower. And making this bounce at VWAP means that there's going to be some long positions entered here, here, here. And when you go below that price, then those people are going to sell, which aid in bringing price lower. And keep in mind, the most important thing here too is that we can delete this level because our 772 bounce already happened. The most important thing to keep in mind is that most of the buying or most of the longs, that like the highest volume longs, are still going to be in this area right here. Like this area right here is where the most longs are. So when we get below this price, that's when the stock is dead. And we're going to continue now anyways. So the whole point I was trying to say is that these bounces happening could just be, instead of it being like a lot of buyer interest, it could have just been sellers like cutting back a little bit. Sorry, let me, in the what I'm trying to say is that if a stock bounces, it isn't always because there are buyers interested or buyer interest is increasing. It could just be that sellers are chilling out a little bit. You know what I mean? Just keep in mind that price doesn't always have to go up from an increase in demand. Price can also go up from a decrease in supply. That's all that to say. That's what I was trying to say. So we get our bounce, and we'll continue watching and seeing what happens. Right back down to VWAP. Now we're into our zone. And right here, this is a really key moment, right? Because if it doesn't hold here, then this stock is going to die, right? So what you're looking for on the level 2 in time and sales is this being bought up, right? That's what we want to know. Is this being bought up? And right here, it hits our 666 level, failing this imbalance. It's in our demand zone. But we also know that this is looking very weak. So what we're thinking to ourselves here is this getting bought up, right? And the only way you can know that is through the time and sales on level 2. If it's being bought up, you can go for a long position, else no. And it looks like it did get bought up, and it gave a decent bounce. But right here, it kind of teeters out, and we're done, right? At this point, after these 4 candles happen, I'm officially thinking this stock is dead, and I'm looking for a short position. Now, where do I take a short position? Not yet, right? Because it's still, until it breaks below this important level, I'm not taking a short yet. It has to break below for me to take a short. It has to, because this is the big line in the sand. We've said it before in the Discord, but we'll say a certain level is the line in the sand. This is the line in the sand. When we're below it, the stock is a dead. If we're above it, the stock still has potential. It doesn't matter that the price is below VWAP, because VWAP isn't the only thing that matters. Volume is what matters. And, you know, as we see, it comes back into the zone again, bounces. And here, we are finally below the level, and it comes back into it, touches the 9 EMA, and we get the flush. So, like, at this point, we know that this stock is dead. It's officially dead. And you can see what I typed into the Discord. I took a screenshot right here. One thing to notice is, do you see how important the area has been for the entire day? And now that we broke below it, shorts are good. I actually located some shares and began scalping short. And one thing that's important to notice is that I did say scalping short. And the reason why is because what I said in the next screenshot. Notice on KPLT how it's just dying now after it breaks below the zone. It's easy shorts. And then I said it wouldn't be surprised to see it bounce on the way back into that zone before pushing lower, which is why I was only scalping with my shorts instead of holding. So almost always, whenever you finally get the break below the line in the sand, it will almost always retest it like once. And that one time that it comes back up to retest is when you go for your like hold short. But until then, I was just scalping. So I scalped this short several times throughout the day. Like right here, you know, I put on a short and bam, take profit. You know what I mean? Put on a short. It goes up a little bit. I'm still holding. Maybe even add to the short. Take profit. You know? Right here is this right here is where you see the retest of this zone. And this is where you would be wanting to put on the short position that you hold for the whole day, and your risk would be $7. Remember, $7 was kind of key back there. Earlier, we had that $7 rejection. It's above this consolidation period right here. I think $7 is like a really good cover area. So right here, you're shorting with a risk of 7. Test in the area, and bam. Let's see if we were right. And overall, it just fades for the most of the day. It never comes back up to that area. I mean, it gets really close, but you hold it, and yeah. So, and then I'm sure, this is, okay, I don't know if I want to make this call, but I'm going to go for it, all right? I wouldn't be surprised that to see this zone, which was formed all the way back here, being significant on Monday, or Tuesday rather, because Labor Day is Monday. I wouldn't be surprised to see this kind of move up. Oh my god. Into the zone, and then like go lower, like just a test. Or actually, it also would make sense to break above it, because, they want to steal the shares, but we're not going to go into too much depth about that. But this level will be important on KPLT next week. I'm fairly confident that that would be the case. All in all, though, I think we covered the array of things I wanted to talk about KPLT. We addressed when you can trade micro pullbacks.